What's going on, guys? In this video we're going to talk about some more supply and demand zone trading. I'm going to show you the zones that I marked out yesterday, so if you watched that video you should have been able to make some money off those zones that we created yesterday. We came perfectly into demand and then we kind of bounced out of that, provided an opportunity to go long. What I have here, my performance account, this is a funded account with Apex Trader Funding. I'll go ahead and drop the link down below for them. But you can see performance account here. Today's P&L, very small. Again, anytime I get a funded account, I never try to go ahead and, make a month's worth of profit in one day. I like to slow grind it and slow roll it, kind of play it safe, play a lot of micros. So again, if you have a 50K account, 100K account, 25K account, don't just do yourself a favor. Don't trade minis, just trade micros. You can make decent money. Get 3 or 4, 5 different funded accounts with 1, 2, 3 different companies, and you're going to see those P&L start to rack up. So you can see here, total trade P&L was 283. My commissions and fees was $30.30. My net P&L is 250. So I made 250 on the day, which is fine. Took 11 trades, 9 of those were winners, 2 of those were losers, 81% hit rate. You can see there. So what we're going to look at here is the 5-minute time frame on the NASDAQ 100. This is the chart that I was playing today. This is the product that I was trading today. So /NQ, even though I'm trading micros, I still use the NQ contract to just kind of use my buy and sells. And also, here's another thing, right? A lot of the prop firms you're going to use like Trade-Ovate or Ninja Trader or some off-the-wall platform. Not saying that they're not good, but I've been trading options on Thinkorswim for over 6 years now. And I just like the way that I have it set up. I like the way that the charting is. So what I will do is actually just kind of go into my Ninja Trader. I'll just pull up my order ticket, and you can see my order ticket here in the left-hand side. So I'll just pull up this order ticket and I'll watch my regular Thinkorswim chart. I never use the Ninja Trader platform. I never use a Trade-Ovate platform when I'm trading futures. I will just simply watch the Thinkorswim platform and buy and sell based on what I've got technical wise going on that chart. So it makes it very simple. All I got to do is just click buy, click sell. It's not that big of a deal, right? I don't need to like learn a new platform. So the green line down here, the green box, is the demand zone that we drew up yesterday. If you want to see that video, go back yesterday. I explained how we set up this demand zone. In the pre-market, before the market opened, we dropped down below in this demand zone here, and then we kind of trickled back in. This green candle here at 6:30 right off the open is what started to excite me. We got back over the 20-period moving average. We got back into this demand zone here, and all I was looking for was a confirmation to close over this previous candle here. So the 6:30 a.m. candle, nice green bar candle here. We're back over the 20. We're pushing back up into the demand zone here after prior of a loss of that demand zone. So anytime we come into demand, what do we want to be doing, especially when we're range bound, right? So that was another video that I spoke on yesterday. Go back and find that one. But anytime we're in a range, we have to give the bulls the benefit of the doubt, and we have to give the bears the benefit of the doubt. There is no one particular side that is breaking out and allowing that big continuation. So when we get to demand, instead of trying to short the breakdown, or when we get to supply, instead of trying to go long on the breakout, we have to be selling supply, buying demand, selling supply, buying demand. Versus a lot of times when we're in a trending market, and we get down to a level of demand, let's say for example we're trending down, we get down to that level of demand, normally we're gonna consolidate there, we're gonna bounce, and then when we lose that level, that's when we want to go short. But in this case here, since we've been range bound for the past 5 days, what we actually want to do is just go ahead and let those emotions go, trust the charts. If we do lose the low below this demand zone, then this is our stop loss down here. Our stop loss would have been 13,032 on the NAS. So as we started to push up here, we got the close over the 20. I was looking at the 6:35 candle for entry. We did break the previous high. I got in on this candle here, sat through a little bit of drawdown, for 5 minutes, wasn't that bad. And then we started to push out of the demand zone. And it's really when we got back out of this demand zone is when I sold. So I wasn't looking for too much. All I was looking for was just a quick pop here. So if we kind of look at my entry at around 13,088, I sold in around 13,108. So 15-20 point move very quickly, trading micros, 2-3 contracts at a time, nothing major. You just kind of stack those wins. I seen the consolidation start to happen here, and we consolidated right here at the top of this demand zone. So what I did was set another level here above the previous wick high, the highest wick that we had in this whole consolidation, and that price was around 13,130. As soon as we broke this price, I went ahead and scalped another 5 points off of this very quickly. I waited for a true back test to come back down into the demand zone, and what I was going to do then was now wait for us to consolidate, you know, back in this demand zone and then kind of push off higher. So as soon as we started to break through the 20 period moving average, I went ahead and scalped again long here, again not expecting to come all the way up here. I know we have a lot of price action to the left here, so all I was looking for another 5 points, another 5, 6, 7 points on that scalp. So that's how I scalp the Nasdaq futures. I'm in and out within 5 minutes. I'm in and out within a minute, 2 minutes. I'm not really looking for a whole lot. I'm just looking to stack gains. That's why you've seen I had 11 trades, 8 of them were winners and only 2 were losers. Here was a little bit of a play here that I actually did take short, kind of a riskier play because we are above demand. But as soon as we closed back over, or back under, excuse me, this 20 period moving average, and we confirmed, I went ahead and went short. I understood that we had a lot of price action sitting here. I understood we have demand here. So all I was looking for was a quick move. So this move went from 13,121 all the way down to 13,112. So we're looking at about a 10-point move. Again, when I'm playing micros, 3 or 4 contracts, I'm only looking for like 5, 6, 7, 8 points. As soon as I get that, I'm going to take 30, take the 50, take the $40, and I'm just going to keep it moving, right? Keep it moving. Now, I was almost anticipating that we do come back into the bottom of demand, but again, this is New York lunch hour. It's currently 9:30 a.m. Pacific Standard Time. Wasn't really expecting much. We are really consolidating now, kind of just going sideways over demand. The next level that I'm going to be looking for here is going to be this level here. So this is acting as intraday supply 13,158. If we do get a break over 13,158, you can definitely play that to the long side. Again, take your profits on the way up because it could stop at any time between 13,150 and around 13,220. Again, I would never expect this to break and go all the way up in one candle. We're going to break, we're going to put in a new high. Either we're going to consolidate sideways or we're going to pull back. And then when we do pull back, if we do consolidate, hold this level still and take out the new high, that's when you can take another scalp long. So that's exactly how I play my supply and demand zones. Just wanted to give you guys a little bit of a breakdown and show you guys it is possible to get funded with some of these prop firms. The only thing is you can't be greedy, right? You have to take it day by day, trade by trade. You know, again, if $100 or two, like I made 250 today, if 250 doesn't seem like a lot to you, we'll trade on 3 or 4 accounts, right? So go get, you know, 2 accounts with this company, get 2 accounts with another company, you know, take some withdrawals, put some money into a personal account, trade that personal account. So for example, if I log into my Thinkorswim today, I only took 1 options trade, right? I only took 1 options trade on Thinkorswim. That was a Tesla short. So what I was looking at here on the Tesla short was 165 puts. Okay, currently trading at 163. I'm already out of this position. It's $2 down from that. All I used was a 20 period moving average, looked for the close below it on a 1-hour time frame and a 5-hour time frame. As soon as we got that close below it, we obviously know we're coming off those earnings. As you see here, NAS breaking out. Looks like it's gonna, you know, put in a little bit of move. But I took $700 on $740 and some change on that. I do have a current open P&L on another particular trade. So as of right now in the Thinkorswim account, I'm up $431.09. Over here on the prop firm, I'm up about $250. So if you kind of look at it, that's 2 accounts spreading my risk, and I'm up about $600 on the day, which is a fantastic day, right? For me, you know, can I sit here and trade all day? Can I sit here and trade more accounts or use more size? My options account is a 6-figure account, so I can definitely sit here and trade more. But the way I look at it is like, if you can manage, you know, $300, $400, $500 a day, I'm not saying that it's going to happen every day, but if you can make $300 today, $400 tomorrow, you make a $600 day, you're already up at like $1,500, $2,000 for the week. If you kind of just average that out, obviously every week's not going to be green. Let's say even out of the 4 weeks, you're profitable 3 weeks at a time, just kind of slow burning this account, slow rolling it. You know, you make $1,500 this week, you make $2,000 next week, that's $3,500. Let's say you take a down week and you're flat, you lose $500, and the next week you come back and you make $2,000. You're already making like $6,000 on the month. Obviously, all the numbers are going to change on a week in and week out basis depending on market conditions. But if you make $6,000, $5,000, $6,000 in a month, you're looking at, you know, even if you have a second occupation, or, you know, even if you're trying to do this full time, you're looking at anywhere between $60,000 and $75,000 a year. So it's really not that much money when you really look at it, but it is life-changing money if you do work another job. Say you have another job and you're currently pulling in, you know, $50,000 a year, and you're able to add another $50,000 a year to your bottom line. You know, now you're making 6 figures a year. That's really, really good money. Some days are going to be a lot better. Some days you're going to make $1,000 in a day, right? Some days you're going to lose, you know, $200-300. But if you kind of stack those wins up, don't come in with any expectations of, oh, I need to make $1,000 today. I need to do this every day. Understand this is a probability based business. You're going to lose. Those trades are going to happen. You're going to have red days. Those days are going to happen, but you are also going to get those days where you make 1, 2, 3,000. On this new funded account that I have, I'm currently up $1,150 in 3 days. So once this day closes out, I'll be up another $250. That's around $1,300 this week on this particular funded account. So even if I just take all of the stress off, don't trade for the rest of the week, come back in, try to do the same thing again next week, keep my losses very, very small and very, very tight. You know, you put up another $1,000, you can average around 4. You can average truly, if you are not greedy and you take the setups based on your system, you can truly average $1,000 a week. Okay, it's not a lot of money. Like, I want to emphasize that $1,000 a week is not a lot of money. It starts to become a lot of money when you average $1,000 a week, you know, based on your system and your risk management plan. And then you have 3 or 4 accounts. So if I average, I'm just going to use, because everyone likes numbers and everyone likes to hear, you know, the big picture. If I average $1,000 a month on this, look at the trade going now on the NAS as we broke that supply zone, right? So that's your trade. Just before I get into how much money we're going to make, look at the 13,161 area, or excuse me, the 13,158 area that I put here. As soon as we broke that, we broke it, put in a new high, right? We put in a new high at 13,160. This becomes your entry. So the 13,158 becomes your pivot. We have to break that. As soon as we break that and pull back, this new high becomes your entry, 13,161. And now we're currently sitting at 13,168, 169. So we got about a 7-point move in a matter of minutes. 7 points on, you know, 5 NQs or MNQs. It's good money, right? That's a good scalp there. You'd be in and out, you know, locking in the bag. Getting back to my point, let's say, for example, you have 3 funded accounts with one company or various companies at different levels, you know, different 50K, 100K, whatever, right? They could all be 50K, doesn't matter. But let's say you have 3 of those accounts, and let's say you get to a consistency level where you're averaging $500 to $1,000 a week per account, right? So let's give an average, a baseline average, that on 3 accounts, you average anywhere between $500 to $1,000 a week per account. You're looking at an additional $3,000 to $4,000 a month per account. When you have 3 accounts, that number jumps significantly, not just 3,000 to 4,000, but goes from 5,000 to 6,000, or even $8,000 to $9,000 a month. Now we're talking about over 6 figures, $100,000 to $120,000 a year, just trading 3 accounts. And that's just making, you know, $200 a day, calling it quits, making $300 a day, calling it quits. It's when people have one funded account or one small personal account and they're trying to make, you know, $5,000 today, you know, or they want to make $10,000 on this one particular account this week. It's very hard and it's very stressful when you try to do that. Spread your risk out accordingly. I would always recommend use funding accounts, use prop firms as leverage to put money into your personal account, right? Just use it as additional income, additional cash flow. So for me, my options account is always going to be priority number 1. Priority number 1 is my options account. That's my baby. I've been growing this thing for 8 years. It's over 6 figures. I definitely, you know, that's what pays the majority of my bills. And all of this stuff, if I add an extra $1,000 a week or an extra $2,000 or $3,000 a month, is just additional income, right? It's additional savings. It's additional money to take a vacation. It's an additional money to buy, you know, things that I want to buy or whatever. But that's how you have to look at it. Don't look at as getting funded as, you know, the end all be all. I hope this video kind of helps. I went on a little rant, but just want to kind of give you guys my thought process on how I use this and show you guys the supply and demand zones that actually came into effect today, and they actually did pretty well. If you guys want to learn exactly how to trade, how I trade, this is just one piece of a very big pie. This is just one setup, and this is just one particular supply and demand kind of, you know, system that I use in conjunction with the overall system that I use for options and futures and so forth. If you guys want to learn more and you guys want to trade with me and you guys want to get access to my mindset coaching and mentorship, and you guys want to learn how to use my strategies on a day in and day out basis, minimize risk to make, you know, decent, consistent living off of this, you know, it's all about risking cents to make dollars. You know, anytime, especially if I'm playing options, if I can risk 50-60 cents, you know, $1 even to make $2 or $3 on the trade, that's a hell of a day for me. Especially when we're playing options. If we can risk, you know, 5-10 point or 3 to 5 points to potentially make, you know, 7, 8, 9, 10 points day in and day out, then we're going to be consistently profitable traders. For me today, my win rate was 88%, but I'm only a 60% trader when it comes to trading futures. My options a little bit higher because I take less trades. I take a hell of a lot more trades when I do trade futures, because I'm in and out more, like, you know, hyper micro scalping. But when I'm trading options, I'll take less trades. Like for today, I only took the 1 trade on Tesla, because I'm to a point in my options account where when I see a setup that I like, I only trade a handful of names. I trade Tesla, Nvidia, probably 80% of the time. If those are not giving me any setups, I might look at Meta, Microsoft, or Apple, or Amazon. And that's about it, right? That's about it. So if I get my plays, I get my plays. You know, if I can take $700 on the day, I could take $700 on a day. That's a hell of a day, right? You do that 2 or 3 times a week, and you're looking at $2,000 to $3,000 a week. So combine that with your options and your prop firm trading, and you can definitely make a good living for yourself. But you do have to take it serious, and you do have to be disciplined. You have to learn how to control your emotions, and that learning how to control your emotions doesn't mean that you don't get upset when you lose. I still get upset when I lose. It doesn't mean that you have to sit there stone-faced when you win and act like you're not happy. When I start live streaming, I'm actually building something very, very big. I'm going to do a live trading floor where I'm going to get real traders in office space, and start live streaming that all market hours. So you're going to hear cussing, you're going to hear, you know, the nitty gritty, you're going to hear call outs, you're going to hear all sorts of emotions going on. Emotions are good when it comes to trading. You want to have emotions, because that just shows you that you're human. We're not robots, right? We can never beat the algorithm. We can never, you know, trade as fast as a quant trader. We can never trade as fast as computers. We know that. You know, science has already proven that humans are emotional beings, and that we suck as traders compared to an algorithm, right? We know that. But when you can understand that it's a probability based business, meaning you're going to lose and you're going to win, and you don't have any emotion as to when you win or lose, knowing that it's just going to come, that's fine. That's where you want to be emotionless, understanding, like, don't get upset that, man, I lost again. When you lose a trade, it's okay to get fired up. When you win a trade, it's okay to get fired up. But just understand that, hey, I'm just on the right side of the probability this time. Next time I might be on the wrong side of the probability. So what do I need to do to kind of manage the emotions so I don't allow myself to go on full tilt and lose a lot of, you know, go into a big drawdown. I hope this video helps you guys. Again, I'm going to make a bunch of videos right now because I'm getting off topic. But if you guys enjoyed this video, make sure to give me a thumbs up, subscribe to the channel, also leave a comment, and I'll see you guys all in the next video.